Well, some analysts have said there are some uncertainty in the yield curve, which can be ascribed to the possibility of the U.S. Federal Reserve tapering into a monetary stimulus. We review how much of an impact this has had on the Nigerian fixed income market with Adetobi Sholanke. She is with the Treasury and Trading Group at Associated Discount House. Well, thanks so much for joining us, Toby. Well, let's kick off with these with those maturities we saw at the bond auction on Wednesday. Can you run us through what the outcome, of those were?
On Wednesday, we had two maturities on offer. We had the 3-year bond, which was issued for the first time in August. The coupon rate is at 13.05. We also had the 20-year bond. It's been reopened constantly this quarter. Now, we had 35 billion on offer for both, which makes 70 billion in total. But we saw that the subscription was actually lower than we have seen this quarter. In fact, for the first time in a long time, we saw that the DMO sold less than what was offered in the circular for the auction. Right. Now, we attribute this to little buying interest. The little buying interest, we're going to say, is because local players had tight liquidity positions this week. We had uncertainty concerning the international scene. We have so many things to consider, and so a lot of people were not very interested, plus the fact that Treasury bill rates at the last auction were actually quite low, or they were lower than the previous stop rates, and so people were projecting that rates were going to be lower. So they pretty much threw kites at this auction, so we saw a very wide range of bids, but DMO cut it off at a certain level, and at that level they weren't able to fill up the amount issued.
All right then. Well, now I also want you to get your thoughts on the 50% cash ratio reserved imposed by the CBN. Now, it's been almost 2 months now, and has this affected the fixed income market in your opinion?
Well, yes, because I'm going to start from liquidity. Okay. Liquidity affects the fixed income market almost directly. In terms of the CRR, we saw an adjustment for the August debit that was done. So there was a further debit of about 242 billion last week, which further tightened the liquidity position of the markets. And so this caused us to see a lot of financial institutions selling down so as to be able to meet their liquidity needs. For that reason, we saw that rates went up, we saw bearish sentiments across board, we saw about 5 basis points rise in yield, because when you sell, rates go up. So that's what happened in the fixed income space. Okay, well, meanwhile, some analysts say, we might see a further increase in the CRR on public sector funds, at the next meeting. Do you agree with that? There might be about 25 basis points. The reason I say this is because the CBN has constantly been has been intervening in the FX market because of the depreciating naira that we've been seeing. And for that reason, they've pretty much created a scenario where one needs to analyze as to whether there needs to be a more long-term approach as to how they're going to manage the state of things in the Nigerian economy. Now, so far, by doing it the first time, the 50%, they have adjusted the situation, but they might choose to further do so by raising the CRR and public sector funds to 75%.
Right. Well, moving back to trends in the market that we've seen this week now, how much influence, are events around the global market having on the fixed income side of things at the moment?
The events we've been seeing, we've had Syria, we've had Russia, we've had the US. We have talks of war, potentially. This creates unrest in economies, and Nigeria is a growing economy from tier 1. A lot of people want to come here to invest, and for that reason, if we have unrest in these economies where obviously they have their own investors, they would want to come to our economy and divest from where they presently are, obviously after their portfolio managers would have done their risk return objectives and seen that Nigeria is probably in a better position, and Nigeria would look like a better place to invest.
Okay, now moving on. In August, we saw the naira traded at an average rate of about 160 naira to the US dollar. Now that's slightly lower than what we saw in July. Now currently it is trading as 162 naira 90 kobo. Where do we go from here? Where do you think it's going to go from here?
I believe 162.90 is not even close to where it's going to stop. It's going to continue. I'm not going to say exactly where I'm thinking it's going to stop, but this constant trend of the depreciation will continue because a lot of analysts are saying that they can't see foreign participation as such, and so where's the money going? So I don't see it stopping anytime soon.
All right, well, taking you back, to the global economy, I mean, the impact of the global economy on the markets. Now, there's some uncertainty in the yield curve, which some analysts are ascribing to the U.S. Federal Reserve, tapering its monetary stimulus. Now, how much of an impact are we seeing?
The yield curve has been relatively, I wouldn't say it's been straight. On the short end, we've seen bearish sentiments. That's about 91 days. When we go to 1 year, funny enough, we've been seeing more demand on that end. Now, this is just to say that more people are projecting that, okay, they're comfortable at 364 days and in that range. And then the long end, with 20 years, has been also slightly bearish, although it closed. The stop rates at the auction for the 20 years stopped at 13.69, but yesterday the market closed at 13.68, which is almost no change. So that is also to confirm the uncertainty that we have been seeing in the yield curve. So I mean, it's not an artificial effect. We can see that what's going on in the US with the Fed is affecting us. The players are waiting. Everybody's waiting to see what is going to happen.
All right, then. Now, moving on to inflation for the month of August, I was reading your forecast, which expects an insignificant rise in the year-on-year from 8.7% to about 8.8%. Now, if that was to be the case, what factors do you think would be responsible for this?
Well, we had the Ramadan. And we had inventory, we had an over-reliance on inventory in July, which is confirmed as the reason why we had a spike in the inflation rate from June to July. We had the Ramadan, we had prices go up. We had the prices of some select food items, some domestic food items actually go up, and this lingered on into most of August. And so that is why we're projecting an 8.8. That's a 10 basis point rise from where it was in July.
Okay, but what's your thought on what we might be seeing at the next MPC meeting?
At the next MPC meeting, well, I would say that it might go two ways. Some people might say that the effect of the CRR debit has not completely set in, and for that reason they would say that, okay, no, they're not going to do anything else. But with what's going on with the naira, there's a possibility that the CRR debit, the CRR ratio might actually be reviewed, as well as the net opening position for the naira.
All right, now just before you go, now what's your outlook for the fixed income market going forward?
Going forward, next week we have the FAC meeting, which should be holding somewhere in the middle of the week, and then by the end of the week, hopefully, there will be some disbursement of funds. We have Treasury bill maturities of 156.5 billion on Thursday, that's the 19th of September. And we also have the fourth quarter calendar for Treasury bills and bonds, which haven't been released. And this could also attribute we could also attribute the reason for the uncertainty in the yield curve as well, because most players don't know where the market is going. So yes, we'll be expecting all of that next week. Plus, we have the we have the MPC meeting in the upper week, on the 23rd. So 23rd and 24th. So we'd be also expecting that in the fixed income space.
Now, when do you think we might be seeing the Q4 calendar released?
It should be released next week for both Treasury bills and bonds. Ordinarily, the Treasury bill auction takes place fortnightly. We had one 2 weeks ago, and so we don't know when. Well, ordinarily we should have one next week, but there's no calendar. So by next week, we should have a calendar for T-bills at least, but there will be a release next week.
All right, thank you so much. I think we're going to have to end it on that note on this segment of the show. I've been speaking with Adeto Bishola, and she's with the Treasury and Trading Group at Associated Discount House. Well,